Good morning, everybody. I hope your evening was delightful. Pretty warm here in Wichita, but after boxing, 85 degrees with a high wind sitting on the back deck. Was pretty nice when you get right down to it. Okay, the rumor out is that gold knows, and we're gonna we'll put it up on the screen when about a minute before the news actually hit. We'll do a split screen with the note, and we'll see if they actually do know, if they run it down or they run it up. Now, the play is non-farm payroll numbers, and according to Zero Hedge, hourly wages. If they get an hourly wage increase of 0.2, and if they've got a number greater than 220,000, the Fed can raise interest rates sooner rather than later, and both the stock market and financials will sell. Now, the one problem with this is that the financials have been run down a great deal in front of the news, and so bad news would take them lower, but the bottom may not fall out of this market, because if you're in the 30-year, the bottom has fallen out of the market. The 10-year has come off a couple of points, so this market is poised to run. I think the best place to see the potential impact of this morning's news is right over in here, this 125 even area. It's a pretty round number. 125, 124, 24. So 24.16, 125 is a pretty big number. Then we've got 23.16 beneath it. So this is going to be pretty good support, and this will be good support. As far as resistance goes, pretty clean break in the 126.04, 126.08 area. Not to mention the highs that we've had. 130. We started out 129 plus in April. You can see that we've come from 127.20 down to 125, 2.5 points in 4 trading days. So a lot of the bad news is built into this market, in my opinion. So the trade with the most potential is going to be to the upside. Now, we can put all sorts of numbers up there and we can play with it, but you can see right here a very clean break in the markets at 125.12. One way to play this market is to have a scoop order 24 to 32 ticks above and beneath the market, about 30 seconds before the news actually hits. Large institutions sideline themselves. Remember, a large institution, a trust department, a pension fund, mutual funds, by their investment strategies, I think like 98% of all the funds out there can only be long the market. So, and they're already long the market into the news. And their investment funds will be a small percentage of what the entire fund holds, that come up every month. So what they do is they sideline themselves before the news with the idea that maybe we can buy it cheaper, because by the end of the month they've got to be 95-98% fully invested. They can't have big cash positions, and so the liquidity that you need to trade on the opening or to buy stop or sell stop in the market is not there in the financials, or any of the markets. So if you're going to prosper off of this, you're going to have to take a position before the news is released, and because the market has been so heavily sold, the trade with the most potential is to the upside. The last 2 days in the financials, we've seen calls bought and puts liquidated. So the market has made pretty good trading profits. They're booking that before the number hits. The number hit and they'll start all over again. Okay, non-farm payrolls 220K. If it comes in at this number or greater, and you get hourly earnings increase of plus 0.2. The Fed can raise interest rates sooner rather than later. Private non-farm payroll is 215, and again, that's a pretty healthy number. Hourly earnings, the participation rate, which is a new one that those services are beginning to carry, 62.7. That takes us back a long way, I think, into the 70s when it's been this low before. Hourly earnings, average earnings up 0.2, and then work week at 34.5. So the number one focus will be right here. If you believe zero hedge, number two focus will be the hourly earnings. And we'll see what happens. So a scoop order, 24 to 32 ticks away, especially on the downside because the market has been so heavily sold, is the way that I would play, is a way you could play it. I'm not recommending to do that. 24 ticks below and maybe 32 ticks above. And what will happen at 32 ticks is 1 full point, somebody will take profits, and that should pause the market. If we didn't have the news right now, we would be trying to sell 23s to 27s, and then 31 to 03. On the buy side, we would give it a little room. I like this area down here, so the 17 to 13, and especially the 13 level, would be buy 1. That's just based on the structure. And then buy 2 would be 5 to 9. But because of the news, I mean, these numbers could factor in, but we're not going to. And we'll just see what the market brings, but we're not going to have resting limit buys or sells in these areas either. Okay, looking at the ZB. And we'll take a look at the look at this over the last 4 days. We were at 156, say 157, and we got down to 148.21. That's 9 points. That's $9,000. This thing is really oversold. Trying to buy it up on a scoop order, I think, would make some sense on this. And this 48.11 area, you can see it over here, 48.12, 48.12, 16, somewhere near 40. So 48.21, 48.13, somewhere in there would be a good place for a scoop order. And as far as resistance goes, we've got 151.20. We've got the spill from 153. We've got this low. So you can see right across here, this high, this little 3-letter ledge, this low, this 2-letter ledge. So 152 is probably pretty stout resistance, just structurally. So 148.12 to 20, and 152 to maybe as high as 152.20 is where resistance should be off the structure. Looking at the this contract, if it weren't for news, we'd be trying to buy the 13 to 9 area, leaning against this, and then we'd open it up 29 to 1. Actually getting into this, let's make it 5 to 9, buy 1. And buy 2, 29 to 01. And on the sell side, we're at 16, so 23, 27. And then we'd open it up to 3 to 7. And we're using our number 1 levels for where near resistance and support are, and then we skip our number 2 and we go to our number 3 because of the volatility in this market. I mean, this thing moves. It's a big contract, and we just if it's gonna move it, I mean, the number 1 levels are just blown through. They don't hold up at all, or they're solid, and that's the dilemma that we face. Okay, gold is pointed lower. People say that those in the know will be in the gold market. Gold is pointed lower, so they're telling us that we're going to get at least it's actually trading lower now too. They're telling us we're going to at least get our 220. And you know, because the numbers are cooked, it's really difficult to have a great deal of confidence in the numbers. All we can do is react with the large institutions who are reacting to the headlines. So this one is pointed lower. It's saying that the market we're going to get at least that 220K number or more, if you believe that gold knows what the number is before it's released. So structurally right now, if it weren't for the news, we would be trying to sell 75s to 77 would be sell 1, and then 80 to 82 would be sell 2. And we're doing the exercise, folks. Stops below 70, those 68 to 70. And because we're making new lows, we're going to drop the next one to 63, 65. And we'll have to adjust all these numbers after the news hits. So $15 off the market where the news hits would be a reasonable place to have a scoop order. Okay, the euro, there is no Greece deal. We knew that. They want everything bundled. Really, I think what's going to come out of the EU is that Cyprus will be given, if that's how you pronounce his name, 30 days to get a vote from his parliament to accept the austerity moves that are coming to Greece, whether they like it or not. If they can't get Europe to pay for them, and it looks like Europe's not, they are going to get austerity. I mean, the bottom will fall out of that economy and market, kind of like that happened in Iceland. But once that happens and the day of reckoning has finally come, then they can start over. And right now they're delaying that. So we're rejecting prices below 112. So right now buying 112 even, then on 111.75 would be buy 2 and buy 1. And on the sell side, this 50 area plus or minus would be sell 1, and then our 75 to 85 would be sell 2. Without the news, but we do have news. Okay, OPEC today is expected to, some people think that OPEC will increase their quotas. I don't think they will. That's not been their style. They usually, because it's so hard to get a number voted in and changed, what they do is they usually, once they can finally agree on a number, that number tends to stay in place for a long period of time, and then they do what they're going to do at the margin. There has been talk this week of OPEC saying they'll increase the quota. Now, if they increase the quota, that with the increased production that's coming and the fight for market share should take prices lower. So I think we'll have that announcement maybe noonish. So crude oil found buyers basically below 57.50, so that'll be our buy one. Quarter to 57.50 will be buy one, and then 56.75, pretty much where we were last night, buy two. On the sell side, it is pointed higher, so 58.75, 59, sell one, 59.50, 75, and again, you got to give it a little bit of room because of rumors or releases out of OPEC. This is a day where a news announcement could really swing the crude oil market, more so than what we get when the inventory figures are released. Okay, let's take a look at the F1 screen on the E-mini. We are getting lower highs yesterday and today. We have found buyers against our 2090 to 92 area. We can see this T period low. This 2090 is a pretty important area. You got an S period low there. You got a T period low. Got a next low would be basically in the 80 area, give or take. And then if we break that, it jumps really just off the bar charts down to 60. So 60, 80, and 90 is where support is off this chart, and resistance is at 20 to 25. So looking at the numbers, we get on the right page. 220, that's our number one focus. 215 for private. 5.4 that I don't think anybody pays attention to because it does cause market whipsaws, but off the news algos, but you don't pay any attention to it. Hourly earnings, according to Zero Hedge, will where it be the number two item, and then work week at 34.5. So number one, 220K. Number two, hourly earnings. If both those equal those numbers or come in higher, the Fed can raise interest rates sooner rather than later. So if we didn't have major news this morning, our buys would be where they have been, 90 to 92. When we've been down in this area, and then 85, 87 for buy two. On the sell side, 99 to 01 for sell one, and then 4 to 6 for sell two. We'll be back with you on the news. It is a news day trade. It is just down to whatever the news is going to be. Know the news and you have the trade. Back with you as soon as possible.